Well, welcome everyone. Today's webinar is part of the Miller Team Realtor Education Series. So if you have joined us here before, welcome back. If this is your first time joining us, we're so thankful to have you here. We'll touch on this later on in the presentation, but you can find all of our previously recorded webinars on our YouTube channel, the Miller Team at VanDyk Mortgage. And my name is Cristina Diaz. I'm a loan originator here at VanDyk Mortgage. I am joined by the one and only Shawn Miller, branch manager at VanDyk Mortgage.
Thanks. Yep. Thank you so much for joining us. We've done a different topic over the last few months. We did just like a mortgage 101. Previously, we did a down payment assistance last month. And next month, we're going to be doing one on our non-QM specialty loan products, which we're doing a lot of these days. So
a lot of important information.
Okay, so Christina's with the branch here for a while now. I'm very proud of her. She becoming one of our top producers here. She's very, very knowledgeable in the industry. So we're going to share what we've learned about condo financing from previous transactions, new guidelines that just went into effect in August, and then new guidelines that are going into effect in January of next year.
Yeah, and really, we want to just prepare both the agents on the listing side and buy side, how to make it a little bit more proactive and smoother, and making sure that we're making the right decisions from the start. How do we navigate and structure these loans if we're going to be going in-house to underwrite these loans, or if we're going to be utilizing some of our investors. So it's just really overall a lot of important information, because there are some things that are changing, mostly I would say good changes.
Yeah.
And then we'll see how some of the stricter guidelines in regards to reserves and budgeting are going to affect the future underwriting process.
Yeah, and on here it shows we're a direct FHA, VA, Fannie Mae, Freddie Mac lenders, so you can do condos on any of those programs. In the past, like FHA condo projects, the project would have to be on FHA's approved list, which we'll go over that link. But the website for where to check to see if they're on FHA's approved list, also VA, and also how to walk you through getting the condo projects approved for the different programs as well too.
Yeah, and I've even closed some condos using down payment assistance. So anything is possible. It's just being prepared on the front end and making sure that we're choosing the right path for the buyer and we're not wasting anybody's time.
Okay, so this is what is a condo? So the easiest way to determine if something is a condo is not by going to Realtor.com or the MLS and seeing, did the listing agent list it as a townhome or a condo? Because plenty of times I see the listing agent listing it as a townhome. However, it is actually a condo. And townhomes are treated just like single family homes for the most part, where a condo, the person owns the condo. However, all the common areas, they're going to be jointly owned by the residents. And not all condos are necessarily high rises. I lived in a condo in South Tampa. There was 6 units in that condo project and they looked like townhomes. However, their legal description was condo. So the simplest way is by looking on the actual property appraiser site. And if you look at property use and or legal description, if it says condo in either of those, it's going to be a condo. If it says PUD or attached villa or townhome, then that they're going to be treated essentially as single family homes. So you don't have to go through the condo approval process.
So what kind of benefits do we have for our buyers when they're looking for condos? A lot of the times, these are great options for secondary homes, people that want to live in a 55 and up community. Mainly on the front end, when we're looking at potential lower costs, we're thinking about, lower purchase prices. Of course, that comes with maybe higher homeowners association fees, but sometimes we're looking at these options for clients that, want to have more of a maintenance-free lifestyle. Maybe they're, a single person living by themselves and they want to have the amenities and not necessarily, the responsibilities of carrying all those amenities like, a pool and everything. So the flexible living is really what they're looking for. And we just try to make sure that it's, available for all of our clients.
And VanDyk Mortgage, we're approved in 49 states. So like in Florida, historically, well, in general, in all states, condos have been more affordable, properties to buy. In Florida, become less affordable, like over the last few years with the condo fees increasing, but it's not like that in everywhere, in every part of the country. Here in Florida, we've seen like the master insurance policies have gotten more expensive year over year, which has caused the condo fees to get more expensive. Like I have a client right now selling a house here in Florida, doing a loan for him on a home he's buying in Ohio, and he's selling his condo for around $200,000, and his condo fees $916 a month.
Yeah.
I have a buyer that just put an offer on another condo yesterday for $199,000 here in Tampa, $199,000, and the condo fees $1,105 a month. Now, that's more expensive,
It's
like
definitely more expensive
for your older couples that are on fixed income, for first time home buyers, where they were a large percentage of the people that were buying these condos.
Yeah.
So I mean, it's gotten more expensive now. My homeowner's insurance from last year to this year actually went down by $1,100 in my single family home. I'm curious to see if the master insurance policies maybe there's more because there's more competition, more homeowner insurance companies are coming in the state.
Yeah.
So I'm wondering if there'll be more homeowners insurance companies that have master insurance policies that can follow suit. That would be awesome.
That would be really awesome and very helpful when we're looking at how we get these projects approved as well.
So with a condo, we're not just qualifying the buyer, we're also qualifying the property. So we'll always underwrite the buyer, like we'll look at their income, their assets, their credit, and depending and loan program. But with the condo project, we have to look at the condo project as a whole. So we have to get the budget, the master insurance policy. We have to look at the budget for what's budgeted for reserves.
The ownership and usage, and you can kind of touch on like what kind of example that would be and where we've seen where it's not necessarily fitting the Fannie Mae guidelines or Freddie Mac guidelines. So where is there an option where it may not fit their guidelines when it comes to ownership?
Well, people, we get calls from agents all the time saying, well, a whole bunch of investors own in this project, like more than 50% are owned by investors. The only time that mattered was if the subject property was an investment property where they wanted more than 51% of the units to be owner occupied. However, that guideline is gone now. So it doesn't matter whether it's the primary residence, second home, investment property. Now the ownership percentage doesn't matter. In regards to when you would need to go and switch from like a conventional loan to like a non-QM loan or that's like a portfolio loan, I call them. If the amount that the condo project has budgeted for reserves is not sufficient currently, that's at 10%. And that guideline is changing next year to 15%. And basically what that is, the condo project has to have 10% of their total association fees budgeted for reserves. If they don't, then we'll switch to a non-QM loan, and we have a ton of outlets. We do those in-house non-QM loans. We can also broker them out. I say we almost have too many options. I feel like, but that's awesome because like having a condo like contract come over, it is more stressful, right?
Yes, it tends to be a lot more stressful because we're looking at all these different factors to get the association approved. The financial health is one aspect of it when we look at like the master budget, the balance sheets. But insurance, I would say, is probably one of the most complex sides of it because we may request for the declaration page on the front end because that's what the seller may have access to. But then when they start to look at what the actually like policy includes, that's when things get a little bit more sticky. We'll kind of dive into that in a future slide. But that's where I tend to see where things go awry is more on the insurance side than anything. Usage is another thing because sometimes the amenities, if the condo association does not actually own the common areas, then that can be an issue for, Fannie or Freddie. If they're leasing out the actual common area from a third party, that's going to be a problem for Fannie or
Yeah,
Freddie.
because I ran into an issue in West Shore Yacht Club in Tampa. So they just going back a number of years here, they basically there's a third party mandatory association fee that they have to pay for the restaurant, I think that's
Mhm.
there, and like it might be the pool and gym, and it's paid to a third party. Anyways, these are things like if you know these things, if there's like a leasehold in the community, it's on a land lease, you're going to want to make sure you're mentioning that to the lender ahead of time. And like for your listings, try to run that by, your trusted lender ahead of time before you're putting, a listing out there and saying you can take conventional financing and it can't take it.
Yeah.
Project characteristics, like if there's commercial part, like in the bottom floor in some of the buildings, condos in South Tampa or in downtown Tampa, they have commercial on the bottom floor. You want to make sure that there's not more than 35% of the project cannot be more than 35%
Mhm.
commercial. That does not include parking garages. That space is not included in that 35% maximum. The general rule of thumb for ownership usage, they don't want more than 20 to 25% of the units to be owned by a single entity. So in some and the way you can check that, if you go to the property appraiser that the property is located in, at least if the property's in Florida, you can actually search Hillsborough County Property Appraiser or Pasco County Property Appraiser, and you can search by a subdivision, and it'll list all the properties in that subdivision, and then you can sort them by the name, and you can see if one entity owns a large percentage of them in there.
Yeah.
So you just need to make sure that more than 20 to 25% are not owned by one entity. If they are, then you're going to have an issue with conventional financing, unless the person that is selling the home is the bulk owner. I learned that
Okay.
one.
Okay. There's some hope there.
Yeah. Okay.
So we have, and I think a lot of you guys are here regarding the condo guideline changes. A lot of these condo guidelines have already been implemented. So maybe you may not have noticed it when you're selling a condo recently in the last, 2 to 3 months. These changes have already been implemented. Or if there's something that's changing, coming up, then you're going to start to see, let's just say you get a condo under contract come December and there's effective changes going in, January 4th or 3rd, then you may start to see where people are going to, tighten up their guidelines then, not necessarily right as the effective date. So, one of the first ones we'll touch on, which is really good news, especially in the state of Florida, is the prior requirement regarding roofs was we needed to have replacement costs coverage on all of the insurable properties. So, the roofs, any of the common areas regarding like where their gym is or where their pool is, all of those structures needed to have replacement costs. And now the new guideline is moving into where they're going to actually allow actual cash value on roofs. And that's also when thinking about insurance, that may be lowering their insurance premiums as well.
Yes, and we're referring to the master insurance policy premiums. Like the interior from the drywall in is called an HO6 policy on a condo, where she's referring to the master insurance policy. The actual cash value on roofs, I mean, I think that could be big,
Yeah.
because like if you had, a 20-year-old roof before, they had to replace the whole entire roof in the event, Hurricane Helene came through and ripped, damaged the roof. They have to replace it in full. Now the insurance company can just provide that actual cash value on that
Mhm.
roof. So that should help bring the master insurance premiums down, hopefully. And then that would in turn hopefully bring down the association fees.
Yeah, the next one is the waiver of project eligibility. So if you were receiving a waiver, it was previously in projects that may have consisted of 2 to 4 units. I mean, it's not very common to see that just because a lot of condo projects are going to be greater than 4 units. But if you had a small townhouse community that was considered a project, maybe this would fall under. So they would sometimes be exempted from having the full review and going through the whole condo project review process. The new guideline, we've expanded this, or not we, Fannie Mae and Freddie Mac have expanded this to 2 to 10 units. So that's great because you kind of mentioned before that I think you had a condo, you were part of a townhouse community that had 6 units.
Or a
So,
condo, yeah.
or yeah, that was a condo.
Yeah.
So we're going to start to see some of those associations that have up to 10 units be exempted from going through this review process.
Which is awesome.
Yeah.
Yes, because I'm on pins and needles whenever I get the condo project while it's going through. But one thing that's helped out, like you do the same, we'll ask our agents to get us a copy of the budget and the master insurance policy ahead of time so we can check those things out. But you get a condo project now that's 2 to 10 units. This is effective immediately when it went into effect. So now we don't need to deal with that anymore. The limited review process. That used to be if somebody was in Florida, we'll just say if somebody was putting 25% or more down on a primary residence or 30% or more down on a second home or investment property, there was what's called a limited review process. That is officially gone. Now everything is a full review. That's not that big of a deal though, because for the most part, they were still filling out the same condo questionnaire on a limited review compared to a full review. It didn't used to be that way back in the day, like years and years ago. The limited review questionnaire was super short.
Yeah, and that changed a couple of years ago where it was very similar in the condo questionnaire. The fundamentals of the review have not changed. They're still looking at, critical repairs. They're still looking at, the reserves and everything. I think the limited review was more back in the day. It was a much shorter questionnaire, but that's changed over the past couple of years. And
Hold on one second.
limited review, sometimes they weren't necessarily taking a deep dive into the financials, but sometimes things would lead to where they still needed to review the master budget.
Yeah, correct.
So I would think overall that change, yes, it sounds a little bit scarier than what it is, but for the most part, most lenders have been following the guidelines and still following the fundamentals of the full review.
Yeah. So we still so now basically, you're getting you're taking a listing, you're going to want to get the seller to get access to all the condo documents, like the budget, the bylaws. But the most important things are the master insurance policy and the budget, for us to be able to take a look at that and just make sure that everything is in line with all of that. The new condo projects, they were previously submitted to what's called the Fannie Mae PERS approval, and then that would get those projects automatically on Fannie Mae's approved list. That basically has been retired. So each lender now can certify the projects up to Fannie Mae and Freddie Mac standards. And then we have, so if you get a listing on a condo and you want to see if it's approved, you can email us the name of the condo project, the property address, and then each lender has a login and password to Fannie Mae and Freddie Mac's basically like condo approval site, and it'll say if the project is approved already and we only need insurance, or if it's approved with conditions, or if it was not approved previously for various reasons.
Then we'll see some of that information.
Now, they don't give the loan officers access to that because as far as I understand, each lender has one login and password to this site. So they're not going to share it with if they have 100 loan officers at their company. So we just have to email our back office and they can look that up for you all, and then we can give you a heads up ahead of time. We'd already touched on the investor concentration.
Yeah, and another part with this Fannie Mae PERS review, basically, if it was a new condo project or even an expired condo project, like it had not been on Fannie Mae or Freddie Mac's approved list in quite some time, you were basically having to go direct to Fannie Mae, not just underwriting it with the lender. But actually sending it over to Fannie Mae for them to check off and say, hey, yeah, we can get this approved and you can submit in your condo project approval and then we can add it to the
It
list.
was pretty expensive to do, so it wasn't something that was commonly done by lenders. It was more so done by newer condo projects where they'd want to get it on the approved list for everybody buying in there initially.
Yeah.
On here, so we covered the investor concentration guidelines. That's completely gone away. So we no longer Fannie Mae, Freddie Mac, which are conventional loans, by the way, no longer care about the investor concentration in a particular community. And then the old reserve requirement, which is the current reserve requirement, the association has to have 10% of their condo fees budgeted for reserves currently. That is changing effective January 4th, unless it gets delayed, to requiring 15% of their annual condo fees to be budgeted for reserves. So I looked up on ChatGPT this morning on how that's going to affect condo fees. And basically, they're anticipating the condo fees to go up by 5.88% with the new requirement of them wanting to have 15% budgeted for reserves. And the reserves are going to be to go towards like stucco roofs, paint, patios, things of that nature.
Future repairs.
Future repairs, yes.
So I think a lot of people are really worried about like that 10 to 15%, but where they're going to, offset that cost is they're going to put it on to the unit owners and then most likely increase their association fees to increase the reserves.
And it's not all bad. I mean, like having a little bit extra set aside, will hopefully avoid, the special assessments in the future.
Yeah,
There may
because
not.
a lot of those assessments are because there was gaps in repairs that were needed. So if we're funding the reserves a little bit more, then, maybe in the future they're not going to be hit with as large assessments. Doesn't mean that they're not, but it's going to bridge that gap for them.
And these guidelines, I mean, like a lot of it stems from like the one condo building that had collapsed in South Florida, however many years that was ago, and them implementing the
Milestone reports.
milestone inspections, which is basically like a Mac Daddy home inspection for the condo project as a whole.
Yeah, it was a domino effect of, how are these condo associations really putting together? And at the end of the day, it's benefiting the unit owners in the sense that, the safety and deferred maintenance, that's all getting addressed. And what we're seeing now is that since that incident that happened in Miami, we had to implement the milestone reports, but now a lot of the milestone reports have been completed. And so they're addressing a lot of the repairs and we're starting to see, okay, we're not having necessarily to worry about, okay, this roof needs to be replaced or it's, no longer like there's no more usage of life on there. So
or if there's cracks to the foundation, and so we've had a number of like clients that have had pretty large special assessments to take care of these repairs. So these things should be taken care of themselves. Let me just submit this person. And I'm not seeing as many issues when we're getting condo project approved anymore.
Yeah.
Like from things that were brought up on the milestone inspection that haven't been repaired.
Correct.
Most situations they have been repaired by now, so that's good because last year, the year before, like it was personally, I thought it was way more stressful getting condo transactions back then. It's gotten better.
Yeah,
this year.
Yeah,
much better. If you want to touch on what we need to collect.
So when on our end, what we need to collect for the underwriting process is similar to what, the listing agent and the seller should be preparing for and reviewing, but we're going to always get the completed questionnaire and that's not going to be ordered until we try to have them order it after the inspections have been completed and they know, hey, we're going to move on and proceed to the next phase of the underwriting and financial process. We're looking at the master insurance declaration or the policies that are included, the property, the liability, any flood, the current year budget, and maybe any balance sheets that may be applicable. And then sometimes when we get the condo questionnaire back, maybe they answered a question, they left it blank. Or I've even seen where they just say unknown. They don't know the answer. Our underwriters will collect the meeting minute notes. The meeting minute notes are going to tell us a lot about like what these board members are talking about, any upcoming special assessments that they may be talking about, what they're going to be voting on in the next meeting. And then also if from the condo questionnaire, if there's certain questions on there regarding any litigations, we're going to request that information as well. And then moving forward, we'll have the structural and inspection reports, including the milestone reports. We'll get that documented when applicable.
Now, like with the balance sheet, what that is, it just shows how much money they got in the bank, essentially. It's kind of like a budget. It looks kind of like it,
Very
but
similar.
yeah, it'll just show what they have allotted for certain things and then how much they have in the bank for reserves. The litigation information. So if there is litigation in that community, you want to get some details on it. If it's just like a slip and fall, no. If it's the condo association is suing the builder for faulty construction, that could be a big deal. Now, if they're suing the builder for faulty construction and they had another builder come in and repair whatever was faulty from the previous builder, that's different if it's already been taken care of and repaired and they're just trying to get some money from the initial builder. But if it's for faulty construction and the repairs haven't been taken care of, that's going to be a big deal. But slip and fall is not a big deal. Condo review process, Cristina touched on this. So after the offer is accepted, we'll wait till they do their home inspection. We'll get the condo questionnaire ordered. The HOA will respond to the condo questionnaire. Then the condo project review happens and we keep everything moving forward with the loan. Not every association has the same process when we're ordering a condo questionnaire. Some of them it's automated and like they have like a questionnaire that's filled out already. Some lenders require their own specific questionnaire to be filled out. Some property managers will allow us to make they charge typically to complete these questionnaires. And some of them will allow us to pay with a credit card online. Some of them will make us mail a physical check to them, and they won't do one single thing until it's mailed to them. So I would typically, make sure you're communicating with the lender how long they think they're going to need to get the condo project approved when you're writing your offers. Because you want to make sure you have enough time with a condo. I would say, it certainly doesn't hurt if you put 45 days in there.
Yeah.
But doesn't mean we can't get them closed in less than 30 days either. We certainly can.
Yeah, and when it comes to the condo questionnaire, and a lot of people think, okay, well, we know the turnaround time because they'll tell us what the due date is, when we expect the property management company to complete the questionnaire and send it back to our team. Now that could be 10 business days alone. That does not mean that the project review is completed once the questionnaire is received. That could just mean, okay, now we have the information, now we have to send it to the underwriters. And then that's when it starts to go back and forth as to how the questions are answered, if any of them were left blank. If they put yes and they should have put no on some of the things. If they say refer to the insurance agent regarding any insurance questions, then we have to go to the insurance agent. That's when things can start to unravel and take a little bit longer. So yes, we can close a lot of these in less than 30 days. Most contracts are in 30 days, but it makes it really tight and it doesn't give us as much time to prepare if there is some back and forth during the actual project review and reviewing the questionnaire and the insurance and any of the financials.
And that part can be a little stressful too, because like not every property manager is going to knock your socks off with their customer service.
Yeah.
Not every master insurance, commercial insurance agent is going to knock your socks off with their service. Now we have had a couple that have done outstanding, and they've actually helped us. Like there's been times where I have this one master insurance company agent that has been awesome over the years.
Yeah.
And I'll call him when we have a tough deal and we're having trouble with another master insurance agent, and he'll give us some tips on what we can do to
navigate those conversations. Yeah, actually, we did speak to him when we had an issue where the insurance agent just refused flat out to answer any of the questions. And he kept on, referring, everything's in the policy, everything's in the policy.
And the policies are like 80 pages long.
Yeah, and the verbiage in the policy is like, we're not insurance advisors and our underwriters are not necessarily insurance advisors. Now, do they see a lot of this information? Yes, but it was not so cut and dry with some of the requirements that were needed. So we had to kind of utilize some of our relationships, going to another insurance agent to have them review. We actually had general counsel that reviewed the policies and then said, hey, yes. So luckily we had general counsel on staff that was willing to look at it. So, having those relationships with certain people that can help you out when others refuse. I've had where some property management companies even just blow the deadline completely. We're waiting on this for, 10 plus business days. The clients have paid a lot of money to get it completed, and then you have your product, your property manager company that may, blow the deadline and just not answer it completely.
Or it's a smaller condo project, and they don't even have a property manager and they do it themselves, and you're having to deal with like, the president of the HOA who also has a full-time job.
Yes.
Or like the president of the HOA is on vacation for a week, or I had one where the president of the HOA was in the hospital, and he was in there for a month. He had major surgery. So I had to call him while he was in the hospital bed to get questions answered and get him to fill out a condo questionnaire. Yeah, that was awesome.
Always kill everyone with kindness because, you never know, what's going on in the back end.
Yeah.
Needless to say.
Yeah. So no joke. Yes, he was. I was helping him answer the questions on the condo questionnaire because he was trying to explain, or he's trying to understand how it all works.
Yeah.
So,
yeah. Or they've transitioned to a new president and they don't have a property management company. Sometimes they think that they have a property management company, but sometimes that property management company may only service, all the collections for the association fees. They may not even say, hey, we're not in charge of answering the questionnaire. You have to refer to the president or the board members to get this answered. So there's sometimes where we run into some things.
yeah. But like, I know personally, I've gotten like 3 or 4 condo projects denied by the condo approval department. We use a third party to do them, and I've gotten denials 3 or 4 times, and we were actually able to get those denials reversed. You were on some of those too, because I'm involved with some of those.
Yeah.
And yeah, we were able to get some of them reversed. One example was when they answered the condo questionnaire, and one of the questions is there mold? Actually, that's on the next slide.
Yeah.
Okay. Well, I'll tell that story next. Okay. So this is a copy of the condo questionnaire. It's actually 1 page long. However, we had to break it up here so we could fit it all on the screen. So these are the questions that they're going to answer. So the first one, like, do they allow for short-term rentals? If yes, what is the minimum rental period? If they allow for daily rentals, that's going to be more difficult to get that approved on a conventional loan. And the way that underwriting could see that, well, obviously if they answer it here, but the underwriters will also go to the condo association like websites sometimes, and if they see that it's operating like a hotel, that's probably going to be an issue for Fannie Mae, Freddie Mac if they allow for daily rentals.
Or simply even just putting in the property address.
Yes, correct.
Is it showing up on Airbnb?
Yes. So, and Airbnb is okay, and not necessarily a deal breaker, but if it's like daily rentals,
yes.
The next that was number 1. So number 2 is, does the project have any of the amenities listed below? Hotel services. If they have like a concierge desk where they check in, check out, that's like a hotel resort. That's going to be an issue.
Yeah, number 2 really it kind of addressed the project characteristics. So, the hotel services, things that are rented out on the property, how are all of these structured? So that's really about like the project characteristics. And, sometimes we'll also see some of this listed on the appraisal. So we'll kind of go over that as well.
Yeah, we do have options where if somebody's buying like a condotel, which that's not as, I don't know if there's any condotels like in Hillsborough, Pasco, Pinellas County.
Yeah.
Sure, but like over in Orlando area, there definitely are. Because a buddy of mine was buying a condotel, and we could do it, but the interest rate was going to be higher on it, and the down payment requirement I think was like 30% down. So it doesn't mean we can't do it. It's just not going to go on like a traditional conventional loan. And by the way, his lender, another lender told him he could do it on a regular conventional loan. And I said, no, you can't. And this is a buddy of mine. I go, no, you can't. It's going to be done as a condo tel. It's going to be a higher interest rate and a higher down payment. He went with the other lender because the other lender told him he could do 20% down instead of 30% down and a lower rate. Well, come to turn out, I was right. The other lender was wrong. However, he ended up sticking with that other lender because they had already ordered the appraisal and he already got his documents. I'm like, okay, not fair, but
He's removed from the Christmas card list, basically. And then here's what we kind of touched upon earlier. Number three, the largest number of units owned by a single person or entity. That's going to be something that is a question on the condo questionnaire as well. Um, Days delinquent for the HOA. How many unit owners are more than 60 days delinquent? And that was something that was more maybe not touched on the limited review. That is definitely on the full review as well.
yeah, I believe that guideline is 15%. I think it's no more than 15% of the unit owners can be 60 days or more past due on their HOA fees. Now, this isn't as common now, but like back when the market tanked in 2008, tons of people were past due on their HOA dues. Now, we would get the condo questionnaire filled out, let's say, for example, on the first of the month, and there'd be more than, and there'd be a higher percentage than there would be toward the end of the month. So I was like, okay, well, if that's the case, we're just going to order a questionnaire later in the month when more people have made their payments, and then the percentage went down, and I was able to get some deals approved that way. So.
But
Good.
you live and you learn. That's really, it's just the experience that you go through others. You try to kind of make sure, okay, well, how can I overcome that in the future? Number six is not very common, but I've done a couple condo projects with a leasehold. Most things are owned fee simple. And then the leasehold, we have some huge associations here in Florida that are under a leasehold, and it's not necessarily as cut and dry with the when you're looking at like the property card. So we actually, the first time I went through this, we did not find out until it was marked on the appraisal report.
That was a land lease, right?
It's a land lease, yeah. So basically, the condo project is leasing the land, and it's not very common these days, but we got it done.
Okay, well, so I had never gotten a transaction done on a condo under a land lease. And I remember you coming to me and I was saying, listen, I've never got this done. And she was like, I'm not going to take that for the answer. And she was, for whatever reason, my office, the light is censored. So it goes dark like every like 20 minutes. I'm off. So I had to wave my hand over the light switch to keep it on. So sorry.
And in that situation, we actually referenced other loan originators within our company because our branch specifically has, done a ton of condo projects.
Yes.
But as a whole, the company, I mean, you're talking about hundreds, maybe even more than hundreds.
Yeah,
so
thousands.
maybe thousands. Yeah, most likely thousands. So it is nice that we were able to reference some past experience and like how we got it done, and who we used and if we were able to go conventional financing.
So if you have a condo project that is under a land lease, make sure to get a copy of that land lease and give that to the lender. So there's a couple projects that we've gotten approved in I think Sun City Center is where they were. I can't remember the name of it.
And Clearwater too.
Was it Top of the World?
On top of the world, yeah.
I think it's on Top of the World. So anyways, get the copy of the land lease, get that over to the lender if that's the situation. Are all the units, common areas, amenities completed? I mean, generally, if it's an existing condo project, they're all going to have been completed. But like I see a new high rise going in downtown Tampa, if that's not the case, or all the unit owners, like the HOA hasn't been turned over to the unit owners on new condo projects, that could be an issue. So make sure you're getting with the lender on those things. Does the condo project have a mandatory club membership other than the HOA? So my example in the West Shore Yacht Club, where they had a mandatory club membership, other than the HOA, it was actually a third HOA fee in that community, and that ended up being an issue for Fannie Mae, Freddie Mac. Fortunately, that condo project was on the VA approved list. And I was able to pivot to that. If not, we were going to have to do like a non-QM portfolio loan.
That's crazy that it was approved on the VA list.
That was awesome.
All right, before we go any further, I know we have some questions in the chat that we want to address. Let's pull up those questions. I think you might have to tap on some things. Oh,
I can go ahead
here.
and go over them with you guys.
Okay.
So we'll start with Jared Weddle, and I apologize if I mispronounced that. His question is, what's the down payment typically and on non-QM? I know we're going to cover that in just a moment, but I want to go ahead and give that question first. And the next question is from Maria. Do you want me to list the questions or do you want to answer them one by one?
Let's go to that question first.
Okay, so if it's the primary residence, conventional loan, 3% down if they haven't owned a home in the last 3 years, 5% if they have. If it's a second home, 10% down. If it's an investment property, it's 20%, well, 15% down technically on an investment property for conventional. Not many people do that though.
And then on the non-QM side, percentage down.
I mean, generally it's going to be 20%. However, we do have options with non-QM with 10% down. However, if they're putting less than 20% down, the guidelines are stricter on that. So, and the interest rate.
The interest rate is going to be so much higher.
So much higher. And if they're putting 20% or more down, the interest rate is going to be very comparable to a conventional rate.
Yeah.
Maybe not exactly a conventional rate, but pretty comparable. And even sometimes for the non-owner occupied, the rates may be better.
It'd be even better
on non-QM. So that's one thing I love about like for where we work, like having the ability to do them in-house, and also we can broker out to the portfolio investors if we have to and pivot.
And we can pivot in-house too. If we were going through the underwriting process and it's not going to meet conventional guidelines, we can even pivot instead of having to start a whole new loan. We can pivot and switch to the non-warrantable side.
Awesome. We had already touched. Sorry, Gabrielle, question.
Yep. Next question is from Maria Warner. Would you recommend that a listing agent run a prospective condo listing by you just to see what the financing options are available?
Yes, 100%. 100%. Because we can, reference some of the pre-approved or the approved lists. And then we can even guide them as to, hey, does the seller have access to the master insurance policies? They can request the master budget. We can review that on your behalf. And then you can kind of be proactive as to what kind of buyers you may be able to, attract or even accept when it comes to any offers.
Yeah, because you look up on the MLS and it says that there's been 5 finance deals in there over the last year.
Yeah.
And they're all conventional. More than likely, an agent is going to put in the remarks for the financing on that listing once it's closed. Even if it was non-QM, they're probably going to mark conventional financing. So just because it says there was a conventional loan approved in there doesn't necessarily mean there was. That's good news if there was multiple sales in there that got financing. It's not bad news. But if you see one like in there that doesn't have any, they're all cash deals.
It doesn't make it impossible because I made a couple months ago on a down payment assistance. We went conventional. The project association had not been approved in over 5 years. Everything else had been cash. So, we just did our due diligence on the front end. We collected the budget. We collected the insurance to kind of see, okay, maybe it just hasn't been, submitted as going conventional in quite some time.
Awesome.
Gabriella, any more questions?
Yeah, we have just a few more. So Melissa, and I believe it's pronounced Medeki, has 2 questions in the chat. The first one, is there a place we can search for approved condos? I know that you answered that already, and then we're going to cover that in a minute. And then her second question is, can you finance a condo hotel, for example, Marriott?
Condos on non-QM, yes. Conventional, no. And then is there a website they can go to they used to be able to go to one for Fannie Mae and Freddie Mac to see if it was on their approved list. Not any longer because they don't give us as loan officers access to that. Our back office has a login to check that. For FHA and VA condo approvals, projects that are approved, we're actually going to go over that here in a few slides. We're going to go over how to look it up on the FHA site and the VA site. We'll show you how to look them up. There's not.
And everyone will have access to that. You can save, the web URL.
Yes, correct. Thank you for pointing out. Yeah, anybody can essentially Google FHA condo approval site, pull that up, or VA condo approval site, but we'll show you how to do it.
All right.
Awesome. Just two more questions, and then you guys can carry on with your presentation. Charles Stevens has a question. How many months back should we get of the meeting minutes?
Oh, geez, I think I get them for the whole year.
Yeah, the whole year.
And I think that I don't know this for sure. I think the meeting minutes are quarterly. I think.
Mm-hmm.
I think they do them 4 times a year. I'm not, don't quote me on that, but I think.
Yeah. And it's also just good to prepare if you, I mean, there may not be anything really bad per se on the meeting minutes, but it's also good to prepare like, hey, when do you think they may be talking about, hey, we're going to vote on this, $15,000 assessment, on the next meeting, and you might be listing a property, a condo, during that time. So it's good to prepare for what's upcoming, and even as a buyer, reading over, so then you're not surprised a year later or a couple of months down the road when something does change.
Yeah, because I don't think everybody votes in the condo association on every decision that's
Mm.
made. A lot of them have boards of directors that make things. I think you can give your opinions if you're a unit owner, but I don't know if every association takes a vote from everybody in the community.
All right.
And one
Any other
final
questions for
question.
now? Okay.
Yep, one
One
more.
more question.
Brian Fangman has condo associations are concerned about filling out questions related to the infrastructure and are deferring to the phase one SIRS report. What happens under these circumstances? And what can a condo association do to improve their lending posture?
Well, I mean, they don't have to say, like, they can just say to the best of their knowledge, and that's what we'll try to walk them down that path. Hey, listen, we don't answer this question. Okay, I understand you don't answer the question regarding the condition of the buildings. However, can you answer to the best of your knowledge? Do you know if there's any required repairs,
Mm-hmm.
or to the best of your knowledge, is is there uh,
Deferred maintenance
deferred
greater than
maintenance?
$10,000 in a unit.
Yeah, yeah. You said, and then usually they'll say yes. Now I've had to go where the property manager went in and answer it, but we went to the president of the association
Mm-hmm.
and we've gotten them to answer the questions, and we've gotten emails from them and email chains, and we put that in the files to try to circumvent
This
you know,
is also where they're
issues that
gonna
arise.
like reference the inspection reports as well. Just to cross-reference some of the answers that are provided.
Did that answer
Awesome.
the
Those are all
question?
the questions. Nope, those are all the
Okay,
questions for now. Thank you so much, guys, for taking a question break.
Alrighty.
awesome.
All right, so just moving on to the questionnaire, we have, does the project have mandatory club memberships other than the HOA? That's kind of, pertaining to if something is potentially like leased out to the association, that's
Yeah.
where we can kind of see that. Is the association subject to any lawsuits or pre-litigation activity? So, not all litigation is going to be a deal killer, and Shawn kind of, touched upon that. And then, does the project contain commercial space? And here you can mark yes. We're kind of just focused on, what percentage of the project is commercial.
Yeah.
So then we know how to navigate and structure the deal.
HOA or developer retain any first right of refusal. So that basically, and it says if yes, are the mortgagees excluded from this first right of refusal. So this was a common question back when the market tanked in '08, where like the HOA. So like I'm sure if you guys have had condo deals, the buyer has to get approved by the HOA, and they might do I don't know if they do credit checks, but they'll do like background checks. I'm sure they may do like a soft credit pull to see if
Yeah.
they make their payments on time. But do background checks, like do they have any like felonies on their record, like pedophile? I mean, like yeah,
Yeah.
sexual offenders. So like the HOA can prevent,
Technically.
I guess, technically prevent somebody from buying in that community if they have like certain offenses in their background. So that does but that does not affect a mortgagee, which is us being a lender. If somebody foreclosed on a home, we do have the ability to come in and take that home back from that person and foreclose on that person, and the HOA cannot prevent us from doing that. So that's why I'd asked the second question: if yes, are the mortgagees excluded from the first right of refusal? Generally, yes, the mortgagees would be excluded from that first right of refusal. Has the HOA obtained any loans to finance improvements or deferred maintenance? So not everybody, like not every special assessment is necessarily going to cover everything that they're going to have to do. Because some of these like high-rise buildings, like if they've been built for a long time and they got to do like significant
Elevators,
repairs and
yeah.
like, I mean, that could be millions and millions of dollars. They may need to take a loan out for that. And then what is the balance of the segregated reserve account? So that's what they essentially have in the reserve bank account. So if they don't have enough budgeted for reserves, we do have on the non-QM products, some of them do have like a reserve requirement, but some of them allow us, like let's say they don't have enough budgeted for reserves, but they have $200,000 in their reserve bank account.
Mm-hmm.
They'll allow what they have in the reserve bank account to be added on to what they have budgeted for reserves to help us get past that guideline. Some of our non-QM lenders literally, like the one specifically, doesn't require any condo questionnaire. All they require is a copy of the master insurance policy. That's it.
Yeah.
They don't require any questionnaire, budget, balance sheet. They just want the master insurance policy. They haven't cared on any of the deals that I sent them on what the deductibles were on the master insurance policy. Where with Fannie Mae and Freddie Mac conventional loans, generally they're going to want 5% is the max that they can have for a deductible, whether that's a hurricane deductible, a sinkhole deductible, because I've had somewhere like, they have a 10% hurricane deductible to keep the master insurance policy more affordable. Well, that's not going to work for conventional. Or if they have a 10% sinkhole deductible, not going to work for conventional. So we're going to have to pivot to non-QM. But again, as long as the buyer is putting 20% or more down, very comparable rates to conventional.
Mm-hmm.
But if we have to pivot from conventional to like a non-QM, that is going to potentially add time onto it. So I would probably again put like a 40-day close on a condo contract.
Yeah, it's always nice to have a little bit of cushion, especially if it's a condo association that has not been, listed on the approval list before, and we don't have that much information. I would, just do the due diligence on the front end and just prepare everybody both on the sell side and the buy side.
Regarding special assessments, like Fannie Mae, Freddie Mac, I mean, they're not tickly inside about special assessments. I believe Fannie Mae is more lenient than Freddie Mac, I believe, on the special assessments. So if one of them are more lenient, we're going to pivot to either Fannie Mae or Freddie Mac because they have slightly different guidelines. They're both conventional loans, as far as you all know. Still going to be a conventional loan. The one great part, like here at VanDyk Mortgage, like we're both a Fannie Mae and a Freddie Mac seller servicer, so we can do either type of loan. Where some banks pick one or the other, so we can do both, which that's nice because sometimes we'll see the approvals come over and say, oh, it's approved for Fannie Mae, but it's
not on Freddie Mac. Yeah.
So then we'll have to switch our rate lock from conventional Fannie Mae to conventional Freddie Mac.
Yeah.
However, we're getting it done.
Yes, exactly. Getting it done. All right, moving on. I think the questionnaire still continues.
The never-ending story here. Okay, you can hit on these.
Does the project have material deficiencies that would result in critical elements or system failures within 1 year? So if yes, what are the elements that are impacted? So that would be more pertaining to like ACs and electrical components.
Yeah.
You don't typically really that's something that can be also addressed on the inspection report.
One thing you want to make sure of, if they're doing renovations to that condo project, let the lender know up front, because that could very well be an issue for a conventional loan, Fannie Mae or Freddie Mac.
Yeah.
If they're in the process of doing it. Now, if they're replacing roofs because of hurricane damage, that's one thing. If they're proactively replacing roofs because, it's just it was their plan to do it and they're not like damaged, then I think they can work around it for conventional loans.
Yeah, and then a lot of what we were seeing even after some of the hurricanes is that there were repairs that were outstanding, even to the common areas. It doesn't matter if it was like the dock that's on the other side of the association. It has nothing to do with the actual physical unit. The project association as a whole would not be, we could not go conventional financing for any outstanding repairs, even to the common areas.
Fortunately, again, as it's after her, it was Helene or Milton came through. I was working on a refinance for a client for mine, and they had a condo over by Rocky Point. And like the whole entire garage area, parking garage area, the pool was demolished, the dock was demolished. On our non-QM product, as long as through one of our investors, as long as the physical unit was not affected, we were okay to close it on non-QM. That was not the case on conventional, though.
Yeah, conventional won't accept that.
Yeah.
But now that we've moved forward and further away from, what happened a couple years ago with the hurricanes, we're not necessarily seeing, as many outstanding repairs.
Hopefully we stay free.
Yes.
This year. This is okay, is there mold, water intrusion, or damaged leaks that have not been repaired? Okay, so I got one on one of mine that said yes. Yes. And it said, if yes, please explain, to the back of the building. And I was like, they're like, we can't do it. So they denied the condo project. Okay. I was like, well, hold on. Don't deny the condo project. Let me call the property manager. And I don't know if I got a hold of the president or property manager. It was one or the other. I said, hey, listen, this mold, where is this? They're like, oh, it's in the closet of one of the units. I was like, how many units are in the subdivision? They're like 200. I was like, so one unit out of 200 in the closet has some mold that they're remedying. I go, could you please put that down on the explanation as opposed to the south end of the building? Like
Yeah.
it isn't the whole entire south end of the building. It's one unit in the south end of the building in the closet of that, and they're working on remedying it. And we were able to get it approved then. So
it's a perfect example when there is a yes or something that could be deemed as a denial. You want to get as much information as possible. Go to the person that actually answered the questionnaire. Okay, why did you say yes? What does it mean? Let's just see what we can do, because sometimes when yes doesn't mean necessarily no for conventional.
Yeah, if there's a new property manager that picked up that took over the project, like you may have to go back to the previous property manager. If there's a new president, you may need to go to the previous president. So I've done that before, where we went to the previous president who wasn't even living in there anymore, and then he was able to answer the questions, and then in turn the new president was able to answer the questions. So try to go through a trusted lender that's going to, roll their sleeves up and fight to get these things done. Because sometimes it is a little bit of a fight.
Battle. Yeah.
Physical deterioration, you kind of touched on that already.
Or a little bit repetitive.
And
then any unfunded repairs costing more than $10,000 per unit that should be repaired within the next 12 months.
Okay. Going over the budget. So here's an example of what a budget's going to look like. We highlighted in yellow what the important things are to look at. The most important is the annual association fees. So you see 2025 was 467,000 in HOA fees, went up in 2026 to 512,000. So that went up by 10%. Their association fees went up by 10% from 2025 to 2026.
Wow.
Hopefully from 2026 to 2027, that won't happen again. But so you see here for 2026, 512,860. And if you go down to the total reserves at the bottom of the form, 51,500. So you multiply the 512,860 times 10%, that equals 51,288. So basically the reserves are right at the 10%. Now, if the reserves are under the 10%, if you look up about 6 lines, you see highlighted utilities for water, sewer, trash, and cable. So that's basically, they have budgeted to pay that for the whole entire association. We can essentially subtract that from the total HOA fees and multiply that number times 10%. And as long as this is like a little trick of the trade, and as long as the reserves are 10% or more of that amount, then it would still be at the 10% reserve requirement, because it's taken into consideration the HOA covering the sewer for the water and sewer for the whole community, the trash for the whole community, and the cable TV for the whole community.
So essentially, we can add those items that are applicable for the entire community into the reserves.
Well, we could actually subtract
Subtract
the
it
from the HO from the maintenance fees, multiply that times
Okay.
10%. And then if like, you know, if like they cover internet for the whole association, that can be factored in. If you notice above electric, I did not highlight electric, the $1,800. That's because that $1,800 would not be for all the units in there. It is for like the common areas, because all the units obviously are going to pay more than $1,800 a year in electric. My electric bill last month was $785. That was great. That was awesome.
Wow.
Unbelievable.
All right, moving on.
Okay. You want to touch on?
Okay, so sometimes, you know, when we get the appraisal back, that can raise some questions. Some common things that it can kind of raise some questions is the number of units. Maybe it does not match what was listed on the condo questionnaire, the occupancy type. We just need to make sure that everything that's listed on the appraisal report is matching what was listed on the condo questionnaire. And then commercial space, because we want to make sure that we're staying below that 35% range when we're trying to go conventional. And then how are things being advertised online? You know, sometimes they'll list those notes in the appraisal report as well. So if it's being listed as daily rentals, hotel style, kind of resort style living, that might be shown on the appraisal report, and it may not have been listed on the condo questionnaire as well.
Yeah, I ran into one on a non-QM loan. It wasn't on a condo, it was a property in Georgia, and they were it was like on 35 acres and it three single family home, three living structures on that same property, and they were advertising it for wedding venues. Venues and events. So as like using it for commercial. Well, we ran into a snag trying to do that on a residential loan when they were advertising it for doing commercial things.
Can we go back to the budget? We have a question from Brian. Would subtracting the utilities make the 10% a higher number?
So in this example, let me see if my calculator pulls up on my screen here. So in this,
move it over to the other screen, yeah.
Okay, so in this example, so you have $512,000, 860, yeah, and we're going to subtract out the water, sewer, subtract out the trash, and subtract out the cable TV equals 394,284. So 10% of that's going to be 39,000. So the 51,000 would be above that. Now, in the event that, like, fast forward to January of next year, if they want to have 115% budgeted for reserves, you know, then that would be 59,142. So it would be short with the new guidelines that kick in January. And the current guidelines would be, it's going to be, we're going to be above that. Now, for your past clients, if you're reaching out to them, if they own condos, you know, before these guidelines kick in, it may not be the worst thing to touch them and see if selling makes the most sense. So if you're taking condo listings, so my client right now that's buying up in Ohio, I'm helping him purchase a house. He's selling his property down here. We're doing a non-QM blanket loan for him. For his condo, it's $199,000 or $200,000 list price. The HOA fee is $916 a month. Now, further down, it says what the HOA fees cover. I had said to him, I would talk with your agent about putting in one of the first two line items of the property description. Hey, this HOA fee that's $916 a month covers the sewer, my internet, trash, water, cable TV. Like, put that in there as opposed to just putting, like, because you do answer those, the agents answer those questions on what the HOA fee covers further down in the listing, but a client may not even, like a prospective buyer may not even go down that far if they see a $916 HOA fee. So maybe put that in like the first few lines of your property description, what that HOA fee covers.
Yeah.
Because you're like, oh, well, my cable bill's $100, my water bill's, $40, my internet bill is another $100. and trash is whatever that is, $20. Well, I mean, if the HOA fee being 916 covers those things, well, technically, if you subtract those out, it's like $600. So it makes it a little bit better.
And then with this budget, this is an older budget, so they may have a release or coming up in the next quarter, they may have the approved budget for 2027 that may have slightly higher reserves as well.
Good point. So I just looked up before we jumped on this training call. I was like, I'm curious, when do most condo projects start to approve their budgets? And basically they said that the board of directors will generally start putting everything together in like August, September, and then they'll be putting it up for a vote in October, November, and then it'll be in effect like they'll have it all done like the last quarter of the year for the upcoming year.
Yeah, because if we're closing this before in December, this is going to be okay. But closing something in January, we would have already seen the 2027 approved budget. Again, we have one more question. If the annual condo budget is established and approved before the January 4th, 2027 date, must it be amended to qualify, or is it grandfathered until the following year?
Okay, I'm going off of my gut tells me it will not be grandfathered, that it would have to be amended to go on a conventional loan. Now, listen, if they kick this can down the road and they, delay it, implementing it for 6 months or till 2028, we have not gotten that inclination. Like as far as we know, this is going into effect. I'm not sure who's getting the word out to all the property managers that this is happening, and the board of directors. So if you do have like past clients in condo communities, this be a nice touch for you all, being agents. You can call them and just say, hey, listen, if you get this on your HOA's like radar. Now, people usually aren't super excited about increasing their condo fees, so like the unit owners, if they're not selling, they may not be as keen to do that. However, if they are selling, they may be more keen to try to push this. But again, it's not all bad. Then there should hopefully be less special assessments in the future if they're budgeting more for the reserves. I know when I was selling a condo in South Tampa, for the master insurance policy, we didn't have adequate coverage on the master insurance policy for the fidelity coverage of it. And I paid separately to add the fidelity coverage. I think it was like $500 or $600 for the whole entire year for the 6-unit condo project. So sometimes it's not expensive to make some of these adjustments, especially when you're like if let's just say the master insurance policy deductible is 10%, and to put it down to 5%. When you're spreading that out over a bunch of unit owners, like I've had somewhere the HOA fees were going to change by $2 a month, $3 a month. Well, if you're able to sell your condos to a more wide range of people, like that is a good thing if it's only affecting your condo fee by $2 a month. You had already touched on this. So like you're a listing agent, you're taking a listing. What do you want to get? Master insurance policy, budget, and any information on special assessments. And we're gonna we'll send this PowerPoint out as well too to anybody that was registered for the class. So you have this, and then you can just make like a little cheat sheet from when you're taking a listing. And even if you're a buyer, your buyer's agent, and your buyer is putting an offer on a listing, try to get a copy of the budget and the master insurance policy from the agent, because you don't want your buyer spending money on a home inspection, if we know that it can't go conventional financing and the buyer can only put 3% or 5% down. Because trying to get a condo project approved for conventional loans, I would say probably we get them approved about 85% of the time, something like that. For FHA, it's going to be less than that percentage. I don't.
And VA as well.
And VA, we can submit to get the condo project approved for FHA or VA, similar to how we do it for conventional, similar documents as well too. Just FHA is less likely to approve them than conventional. VA, if it's not on the VA approved list already, we do here at our company have a little loophole that we can that we've had great success on, where we have the veteran write a letter to the VA and they'll ask for a one-time exception to purchase in that community, and that they're aware of whatever the issue is that doesn't make it eligible to go VA. And knock on wood, fingers crossed, all mine that I've submitted on that one-time exception for VA have all gotten approved. So Yeah.
Another thing is like most of the time, the property management company is not going to answer the questionnaire prior to, submitting payment.
Oh, great point. Yeah, because I had an agent ask about that. They're like, "Hey, listen, can we get the questionnaires fill it out ahead of time?" I go, "You can, but they won't fill them out for free. Like it might
Yeah.
be 3, 4, $500 to fill them out. And if your buyer, is not getting financing, well, then the seller wasted the money on that. So
Mhm.
they can. I personally, if I was taking a listing, I would just get the master insurance policy and budget reviewed,
Yeah.
and ask these questions that are on the screen now, like, are there any major repairs, special assessments, litigation? Think Christine already covered these with everybody. Okay.
All right, so looking up approved condo projects, I know Shawn has touched on this. When it comes to conventional financing, typically the lender will have access to that. So you can send us an email with the property address. We can look up the property card as well. If you know the condo association name as well, that's all great information. So we can kind of look that up. When it comes to FHA and VA, anybody can look this up. There is the websites listed below. For FHA and VA, we can go through an actual live example of looking up,
Okay. So here's FHA site here. Okay. So you're gonna, and okay, we'll email this out to everybody. So you go Florida, and then like let's just say you want to see all the approved condo projects in Tampa. Okay. Or if you want a zip code, or if you want to do condo name. Generally, um, you want to be less specific. So if you're doing a condo name, and let's just say it's, you know, Sola Vista Condominium Association of Florida, just type in Sola Vista, as opposed to the whole entire thing. Hold on, my light went out again. Okay, so here, status, either approved, expired, rejected. I like doing all, because then you can see if it was ever approved or rejected. Okay, so now we're just going to do all, and then you can.
that our little screen.
Here, hold on.
Press the little line.
This one?
Yes.
Okay, thank
There we
you.
go.
Okay, so here it shows rejected, expired, withdrawn, approved. Approved through October of 2027, box factory loss. Now, if you see that it's expiring prior to your closing date, that's going to be an issue. However, if you see that it was approved or like expired versus rejected, let's just say it expired like last year. The fact that it was approved once before, it makes it a lot more likely that you'll be able to get it approved again with FHA. And then, so if it's not on the list, like us as a lender, we can do basically almost like a project spot approval where we'll be able to get the project approved up to FHA standards. And it doesn't, by us doing that or a lender doing that, it doesn't go on FHA's approved list per se. You would actually have to submit it to FHA to get on their approved list, and that'll take longer to do that. But here, like here, this one was rejected. So if you click on it, um, here it just shows the date it was rejected on, and it might give you a little bit more information. So again, so this was for FHA. So you can go in here, hey, you got a buyer that, really wants a condo in Tampa. We'll go in here and see which ones are on the approved list. But you can only see Box Factory Loft is approved. Carrollwood Gables condominium is approved. And that is all the only two condo projects in all of Tampa there's only two on there.
For FHA.
For FHA. Okay, but we can do a spot approval to get them approved FHA. Again, it's just not as likely as it's going to be on a conventional loan. So, and again, in the example, like, if you want to just put in the name of a specific condo project, you can type it in there, but just be um, less wordy, so to speak. So status, either approved, expired, rejected, withdrawn. I like doing all just so I can see if it was they were approved or rejected before. And then the VA site see if they're on the VA approved list. There's going to be a lot more on VA's approved list. So here we go to VA.
And that's because they can do the single unit approval request.
Well, the one-time exception we can do.
One-time exception.
Yeah.
Okay.
So for VA, we'll just click on approved and we'll do Tampa and Florida. Okay. Now you'll see how many more are on Tampa, Florida. 79 condo projects are on VA's approved list. And then you can just, you can basically, you could scroll through all of them if you wanted to see all these. They're on the approved list. And I don't believe the VA once they're on the VA approved list, my understanding, I believe they stay on the VA approved list. I don't think they expire like they can for FHA. But so if you wanted to search for VA, you can see if they're on the rejected list as well too. So, and if they're on the rejected list, there we go. Let's see if I get lucky and I pull one because it's accepted without conditions. All right. Okay, here we go. Rejected. So rejected, receive date on the August 10th of 2022. Review completion date, November 6th of 2031. So it's on the rejected list. So in this case, it's on the rejected list. We could just submit for the one-time exception.
Okay. We've spoken a lot about a lot of the obstacles, but
Yeah.
mainly it's going to be the insurance, any like building safety and critical repairs. And then when we talk about like what is Fannie Mae and Freddie Mac define critical repairs as, the seawalls, elevators, balconies, foundation, electrical systems, the parking structures as well. So insurance is really one of the biggest things because it's hard to know what everything needs to be included on the insurance. And sometimes the declaration page that the seller has access to may just list a small fraction of what's included in the insurance policies. So we start to get into like the co-insurance clauses and agreed upon value, maybe
Yeah.
even like the sinkhole coverage. There's other things that, may not be as straightforward or listed on that declaration page.
Yes, it's the main thing. You don't want any of the deductibles to be over 5% on the
Yeah.
master insurance policy. You want to make sure that they have replacement cost coverage to rebuild it if it was damaged. If there's co-insurance on there, other guidelines get factored into that too. And yeah, so you don't need to know all these things, but have like a trusted, lender that can help you out with navigating all these. Buyer's agent, we touched on this like in the beginning, making sure, look at the legal description, property appraiser site, making sure, it shows that it is a condo. We already touched on that.
Definitely always asking for the master insurance policy and budget are the two main things, and the seller should have access to that as well.
Okay, and we touched on these already for what the listing agent, again, we're going to email this to you so you can keep this in your checklist for gathering documents, buyer's agent as well.
Can we go back to the buyer's agent because there's the last factor here,
Okay.
contract
Okay.
contingent
Oh,
upon
yes,
buyer's
thank you.
lender.
Yes, please
Condo project.
please
that's
listen to this
huge.
part. Please listen to this part. Okay.
So Shawn kind of thought about this, I guess, I don't know if I would call it a trick or it's just a great advice to have because we have our financing contingency. If it's left blank, 30 days. And here, if you want to add in the verbiage, contract contingent upon buyer's lender approving the condo project, especially if we're going outside of the 30 days. It's very important
because the buyer's earnest money's up for grabs. So like in additional terms of the contract, like on the second to last page, I think it's page 9 of 10, where where you'll write, seller to contribute 3% of the purchase price towards buyer's prepaids and closing costs. If it's a condo, put in there, contract contingent upon buyer's lender approving the condo project. Buyer's earnest money will be refunded to them in the event that the lender can't get the condo project approved. Because I just have a lot of buyer's agents that will forget that the condo project approval is part of the financing contingency. And I've gotten final approvals, like everything's cleared with the buyer's file, with the exception of the condo project approval. And then the condo project gets denied. We're literally appraisal's done, underwriting's done, everything's done, homeowner insurance bound, title's in. However, the HOA won't answer a question for the condo project approval and deal blows up. So you don't want the buyer's earnest money
Agreed.
to be on the hook. So I would always write that in there, because then even if the financing contingency like expires, if you have this written in additional terms, that the earnest money will be refunded if the buyer's lender cannot get the condo project approved, at least the buyer's
Yeah, because
earnest money is
as a
covered.
lender, we may be still trying to fight for approval or to get some questions rectified, some answers from the insurance agent or the property management company, and that takes time. I mean, that's why condo associations and going through this approval process, it gets pretty lengthy and it's a little bit more complex because there's other people that involve. It's not just the lender and it's not just up to the lender, but it's other people that we need to get answers from and information from.
Yeah, I've had realtors and sellers like go down to the property manager office like to get questions answered. Oh, so yeah, I mean, because they can blow the deal up. The property manager, the president of the association, the master insurance agent, they can blow the deal up if they don't, you know,
We have a
work with us.
question from Brian again. Would 2% versus 5% make a difference on the master insurance policy?
As far as premium goes, I mean, if it's 2%, I mean, the premium.
I'm assuming he's talking about deductibles.
Yeah, so the premium for the master insurance is going to be more expensive if you do 2% over 5%. But as long as it's 5% or less, we're good.
Yeah.
For Fannie Mae, Freddie Mac, FHA, VA. If it's 2%, that's fine too. But 2% or 5%, either or are good.
I really see the 2% more on the unit owners, homeowners insurance policy.
Yes, yes, yeah. So when they're getting what's called the HO6 policy, which is from the drywall in, that will cover there they can have a deductible of 2% or 5%.
Let's go on to
And if the subject property is in a flood zone, um, any part of the condo project is in a flood zone, like where the buildings lie, the project has to have flood insurance. The like even if the side of the building that your unit's in is not in a flood zone, but the other side of the building is in a flood zone, they'll have to have flood insurance. The buyer cannot just get like a separate flood policy just for their unit. Well, they can, but that doesn't allow the master insurance policy not to include flood insurance.
do unit owners have to have flood insurance if it is in a flood policy or a flood zone?
No, no, they don't. They do have to have the HO6 homeowners insurance. However, they aren't required to have flood insurance for the interior of the unit. Now, when the two hurricanes came through a couple years ago, if you were on the first floor, your eight and the flood did the damage, your homeowner's insurance is not going to cover that damage. Only flood insurance would. So you can get an interior flood insurance policy. From what I've heard, so we do a Friday call from 9 to 9:30 with agents that we work with. You should all get a text notification. If you don't, let us know. We have an insurance company on the first Friday of every month. And they had talked about you can get flood insurance for an interior condo unit. However, it's not necessarily like dirt cheap. But yes, great point.
Mhm.
They can get it if they want to get it. That is an option.
Moving on, we have warrantable versus non-warrantable. So really, when it's warrantable, it does meet the guidelines for conventional financing, FHA, VA. Usually that's where we see where things are a little bit more stable. The coverage for insurance is less than 5%, 5% or less. We have sufficient reserves. There's not any outstanding repairs on the property. So when it does not meet the guidelines for conventional financing, VA or FHA, then that's when we start to call it more non-warrantable, and that's when we utilize some of our investors on the non-QM side, or portfolio investors, because sometimes, like Shawn mentioned before, we have some investors that only look at the insurance policy. They're not requesting for a condo questionnaire to be completed. So, how do we navigate what options are available for the non-warrantable side? That's mainly what, the lender will kind of focus on.
Yeah. So if you see not like the MLS shows, hey, cash only or cash and non-warrantable. So phone call to the listing agent. Hey, just curious. why do you say it's cash only, or why do you say like only non-warrantable? Oh, by the way, they don't have, enough budgeted for reserves. Okay, well then you know that up front. I would still have your lender call and ask a few questions, and then for your buyer, if they're a first-time home buyer and they're doing down payment assistance, or if they're wanting to do 3 to 5% down, not going to work. It's not going to work. Don't even waste their time or their money, because they're going to be paying for home inspection. They're going to be paying for the condo review fee. And then you're just going to find out that, oh, they got to do a portfolio loan. And if they're doing 10% down, their rate's, over 8%. And if they did 20% down, their rate is, in the high sixes. Well, they can't do 20% down. Okay, well, just move on. Move on to the next condo or house for them to look at. Cristina said, again, like our portfolio loans. So for the portfolio loans, the non-QM loans, the non-warrantable condo loans, there are 30-year fixed rate options. We have ARM products as well too. And we'll, go over with the buyer, the different options with them to see what route they want to go. But if they were going the portfolio route, ideally, them doing 20% down would be ideal. Not required, but ideal. We can do high loan amounts as well too, up to $2.5 million. I got a buyer right now that is buying down in Miami Beach, and they are buying 2 condos that are right next to each other, and they're wanting to knock out the middle wall and make it one large condo. And I'm like, and they just put a contract in yesterday, and their earnest money deposit is $180,000. It's a
No
one point.
pressure.
No pressure. Yeah. What? No pressure. Oh, by the way, they wrote it up cash as well too. Yep. Cash.
And they're getting financing.
And they're getting financing. Yep. I said I wouldn't necessarily do that. They're like, well, we got a 30-day inspection, so can't you get it done within 30 days? I was like, yeah, I mean, well, we should be able to. I mean, yeah. Yeah, but they put a 70 close. So basically, if we get it all done in 30 days, but they don't want to close for another 45 days, like, what if
the insurance is renewing? What if something's changing on that side?
What if a storm comes through?
Yeah.
Yeah. So, yeah.
All right. So one thing to remember, you don't need to know every single condo guideline. There's a lot of resources that you have, and access to, especially as a lender.
Well, we have to double check ourselves.
Yeah, we have to always double check. Yeah. It's hard to know every single guideline, but it's just, we've learned a lot from experience. So,
learning the hard way, as my mom says. And I tell my mom, my brother doesn't have to learn the hard way when he was a younger kid. He doesn't have to learn the hard way. He could listen. He could listen to me, his older brother. But yeah, you're not going to know everything. Like I would just there'll be a checklist in here that you could print out, that you could just keep in probably like listing folder that you go out that you show to the sellers. If it's a condo, put this checklist in there, and it'll remind you of what questions to ask. I had mentioned we do a Friday morning update call from 9 to 9:30. We'll have an insurance company on the first week of the month. We'll give mortgage updates the second week. We have a title company on the third week of the month, and then a home inspection company sometimes the fourth week of the month. We'll have an appraiser come on there here coming soon. New appraisal guidelines are going into effect this November for the way the appraisals are written on conventional loans. So that could cause some longer turnaround times on appraisals.
increased costs.
Potentially, yes. And because most of the appraisers have been bucking these changes as long as they can buck the changes. And they're basically waiting till they get implemented. I think it's like November 4th. But anyways, we're gonna have an appraiser on one of the Friday
And I
calls.
think VanDyk was one of the first to have the new appraisal form.
Oh yeah. We were the first one in the United States of America to use the new appraisal format for whatever that's worth. So, yeah. So, and then we'll give mortgage update that there's a fifth week of the month, and that's from 9 to 9:30. Everybody should get a text. It's just on Zoom. You don't even have to have your camera on. But like, I learned so much from the insurance company. I mean, they talk every month, and I learn stuff every month on flood insurance, homeowner insurance, master insurance policies. The title company talks about what power of attorneys, survey requirements, a closing in the name of LLC. So like, we'd love to have you all join us. And we're doing a training next month on our specialty loan products. And that is on Tuesday, September 22nd at 10 a.m. We're going to be going over like all our different non-QM loans if you want to rattle some of them off.
We have bank statement loans. We have the investor no doc loan, also known as your DSCR. 1099. What else am I missing?
A blanket loan,
Blanket
bridge
loan.
loans. We're doing a ton of those products now. So you all, again, just like the condos, you don't need to know everything about it, but you know, you need enough like to kind of be dangerous, so to speak. And um, we'll be going over like the highlights for those type of programs for again what's useful to kind of keep in your hip pocket. It can be good touch points for your database. You know, I think I closed 14 loans last month, and probably 6 of them were non-QM loans, blanket loan, bridge loan,
It's almost 50%.
bank statement loan. Yeah, decent amount. Yeah, and if you know any other agents that would be this would be beneficial for them to get on this call, if you could, you know, share their information with us, share our information with them, copy and paste the text message to them that you get before the class, that would be awesome.
Awesome. I'm not seeing any questions come through the chat. Lots of thank yous, and there somebody did go ahead and send us an email to the team account asking for us to check a condo project for them. So already, you know, in action, people are going ahead and getting those questions asked. And if you want to email any projects that you're looking at, you can always send it to the Miller team at VanDykMortgage.com. And again, you'll get an email so that you can go ahead and reply back to that as well.
Thank you so much, everyone.
Awesome. Yep. Appreciate everybody joining us.
Thank you, everybody.
Yep. Call us with anything you need.